The astrophysicist Stephen Perrenod is showing why Bitcoin should be trading today at 137,000 US dollars. So you are essentially getting more than a 50% discount on buying Bitcoin right this second at 64, 65, 66K. But not only that, he also goes and shows why we are, according to the power law, moving towards 300,000 US dollars by 2028. That's not even 2 years away from today. And we also answered an age-old question on why and when BTC will flip gold in market cap, and with that effectively being the most valuable asset on planet Earth by reaching a Bitcoin price of around 1 million US dollars. Enjoy. So great. We have him back, the professor of Bitcoin of the Bitcoin University, where the podcast hosts get to be podcast students. Thank you so much for coming back on the podcast.
Thank you for inviting me again, Robin. It's always a pleasure.
Before we get started with the presentation, how has been the last couple of weeks and months for you, and what is kind of like the most interesting thing for you in your Bitcoin world?
You know, my more general view is the power law continues to hold. We've laid out the falsification criteria for the power law in our scientific paper that was published at the end of June. And I can mention a couple of those as we go through the presentation. But basically, people have to understand that volatility is high. It's a factor of 2, one standard deviation. So for us to be here is not outside of the power law. And we are not able to forecast, within a 1-year time frame, really where things are going to be. We've done some studies about forecastability, and Carlos Baquero at the University of Porto in Portugal has done some studies, and we come to the same general conclusions that inside of 3 months or a bit longer, just a null model is just as good. But at a year or longer, you get superior forecasts from the power law. And then for the shorter periods or the intermediate periods, like from 3 months to 24 to 30 months, if you add a log periodicity mode, or possibly 2 modes, to the power law, you get superior behavior to either the null model or the power law itself. Those log periodic modes say that we should have been actually in a downdraft as of late last year. They don't explain all of what happened. They explain maybe up to half of what happened in the drawdown, but that's also turning more positive. And the fundamental mode, which has been underwater and hit a minimum at the end of 2023, has been moving back up. So the log periodicity is becoming more supportive, and it's on an upward swing until well into 2029. So if that continues and the phase doesn't get moved around or whatever, that's just additional contribution to what the power law trend is. But there's some work to do to get back to trend.
Let's start with the presentation.
Sure. Okay. So the title for today is The Decline and Fall of Fiat and Gold. And the subtitle is 14 Power Laws of Bitcoin. So I'm going to show you 14 different ways to construct power laws in Bitcoin. And I mean that in 2 senses. One is we can actually confirm the power law of price versus age with about a dozen methods. But I'm going to show you 14 power laws across a range of currencies and commodities, and also different ways of having power laws where you're denominated in the dollar. Okay, so the agenda is, first of all, I like to look at log charts. You'll see a lot of charts that are log linear for Bitcoin, but log charts are the superior way to look at it, and the power law jumps out there. Why power laws? I'm going to review that. I always review that. I'm going to remind you that the internet grew as a power law for most of its history until it's saturated. I'm going to show you another socioeconomic power law that involves GDP and energy. And then I'm going to show how you can build something with only 11 candles and immediately see the power law aspect of Bitcoin. I'll list the dozen methods. We're not going to go through all of them, but there were 4 of them that we used in our scientific paper that was published at the end of June. I'm going to give you the backdrop, which is that Bitcoin is autopoietic and self-organizing. And the more typical language that we use is we have a very strong protocol, and that leads to consensus and adoption and eventually to monetary value. And the basic model that we present in our scientific paper is that you have 2 power laws, one of adoption, which is viral, and it's close to a cubic law, and then one which is a network law. It's Metcalfe's law for networks that applies to communication networks and social media networks. Roughly a square law, in its pure form, it's a square law. And when you multiply the 2 together, you get something that's close to the 6th power, and that's what we observe. I'll show you that not just price, but also market cap per Bitcoin, realized market cap, obeys a power law. I'll address the concern that people often raise about, well, what about inflation? And I'll show that's really a secondary consideration. And then I'll look at Bitcoin versus fiat, 6 of which are declining in value, and Bitcoin versus 4 commodities. And those are all power laws. And then an estimate as to when Bitcoin can flip in gold. And I'll talk about stability that comes from power laws. And note that we have closed it by noting that we have 10 power laws across these fiats and these major commodities that all give very similar exponents. The exponents are quite close to each other. So my principal goal is, I have 2 that I'd like you to have as takeaways for people listening in. The first is the realization that there are 3 or more core power laws. There are at least 4 core power laws for Bitcoin. It's not just the price. And then the second one is that the Bitcoin price power law applies across all the major currencies and across major commodities as well. First, a little bit of a primer as to the difference between an exponential and a power law. So in the columns, we've got linear, exponential, and power law. In the rows, we've got linear chart, a log linear chart where it's logarithmic on the y-axis, but it's linear in x, or for our purposes, time. And then on the 3rd row, both axes are logarithmic, so log charts. A linear case is just actually a special case of power law where the index is 1. An exponential is very different. It has a characteristic growth time. And so the equation e raised to the kx, k is the inverse of a particular x value, or a particular, for our purposes, the inverse of a time, it's a time scale. And so it relates to compound annual growth. So, for example, the M2 money supply roughly doubles every decade. For the US money supply, it's not that different for China and other countries. And that's a compound annual growth of about 7%. So that's exponential behavior. Now, if you have an exponential and you put it on a log linear chart, you expect to see a straight line. So that's the middle box here. But we're not looking at those. We're looking at power laws, the 3rd column. And it's not very helpful to put them on linear charts, particularly once you're looking at cube laws or steeper, which is what we're doing. So you're better off with a log linear chart, but best of all with a log chart. And so those are highlighted. So we're going to focus on the last row and the last column. I like to say that Bitcoin is the first scientifically precise monetary standard in human history, and something that humanity's been in need of for centuries. Of course, Saifedean laid out the argument in 2018 in his book, The Bitcoin Standard, that its issuance schedule make it a new kind of monetary standard. And so it is scientifically precise to 15 digits, fixed, finite, highly precise definition. So it's like the meter and the kilogram, the second and the joule in that sense. And it's also created from energy math and game theory. So it really makes sense to have Bitcoin as a scientific standard. And we go from the protocol through the consensus, security adoption, and we emerge in power laws. So why a power law model? Nature loves power laws. Both gravity and electromagnetism, as shown in these little cartoons in the first two panels, are 1 over r squared, 1 over distance squared kinds of laws. And they're pretty pure laws, at least, for Newtonian gravity and so forth. It gets a little more complicated with general relativity. But there are two nuclear forces, the strong force in the third panel and the weak force in the fourth. They both have power law components as well. There's a 1 over r squared term for the strong force, and there are 1 over r and 1 over r squared for the weak force. Now, they have additional terms. The strong force has this very strong spring-like nature that keeps the quarks confined inside the protons and the neutrons, and the weak force, because it's about decay, has exponential terms because negative exponentials are associated with decay. But the power law appears in all of those. And so it's really not surprising that you find it in other areas. And you find it in particular in socioeconomic distributions, including things like the Pareto effect with income and wealth. You find it with city populations, the distribution of how many cities per population, firm sizes, stock returns, not for the overall returns. Those are more like exponential compound growth or runaway exponentials and crashes. But the tails of the distributions often can be power laws. And you find it, this was actually referenced in an article on COVID. You find it with the viral spread as well, and that's relevant to us. And networks, both communication and social, obey power laws. Metcalfe identified this, that it grows as a square of the number of users or the number of nodes in the network. So Metcalfe's law in its pure form is stated as the value of the network grows roughly as a square. It grows as n times n minus 1, where those are the number of users, participants. In our case, we can measure wallets or addresses, and divided by 2. So you're counting the number of channels between all the different participants and players. So it's basically an n squared law. Now, when we look at how the number of wallets has grown for Bitcoin, we find that it's grown as the cube of age, approximately. So if we then take that as the users and then plug it into Metcalfe's law, where the value goes as n squared, you get a t cubed squared effect. So you get the cube of the age for the number of participants, and the value goes as a square of that. And so that gets you up to the 6th power, roughly. Now, it turns out when we measure it to be not quite a square, more like a 1.8 exponent, and we end up with price going something like the 5.7 power when we do the regression of, log space. Log price versus log time gives you a straight line, or price is age of Bitcoin raised to an exponent. And we cannot pick an arbitrary age. We have to pick the start of the network. So that's January 3rd, 2009. There's no kind of inherent time scale with the power law. This is what we call scale invariance. This is, you can probably guess what this is. It grew for 30 years as the 4.6 power. So it went from millions of users, 2.6 million in 1990, to when it started to saturate, 2019, 4.2 billion. And I wrote an article on this, posted it in X almost 2 years ago, and I found a 4.6 power law roughly. It's not perfect, but it has a very high R squared, about 0.97, and it fits over 3 decades. And the age you use is when TCP/IP was introduced and standardized for the internet. So that's 1983. That's really what triggered the growth, even though the early internet started, 14 years prior. But it took TCP/IP for it to start growing into corporations and eventually to end users. And I just asked Chad, I said, just do a quick estimate based on, that 30-year period. And it said 4.5 when I asked it earlier today. So validating that. But here's another example that, you might not be as aware of. And that is a parallel relationship between GDP per capita and energy usage per capita. So we have log chart here. And on the y-axis, we have 3 orders of magnitude in energy usage. And that's per capita in kilowatt hours. And then we have the GDP per capita on the x-axis, again in a log chart. Now, you see a bunch of colored lines here because it's actually tracing over 30 years of paths for individual countries, how they moved around in that space. But everything kind of clusters along this, this black line, which is energy to the 2/3 power. So there's another human behavior, socioeconomic power law that kind of springs out at you on a log chart.
So this kind of shows that the more energy you use, the higher the GDP per capita is in a country, or the other way around. Like I don't know if there's a correlation,
that's
but
exactly that. Yeah. And then, of course, they're coupled, and there's feedback. And I haven't seen what the lead lag relationship is, but if you build up energy usage, there will be users up for it, consumers for it. Okay, here's a chart that only has 11 data points, but they're candles, so they're actually ranges. And with that, it fits the power law slopes very well. But what's different about this is a triple log candle chart. So the y-axis is log price, the x-axis is the log 10 of Bitcoin age, ranging from when it was about 1.5 years old to, the present, essentially. But what I've done here with the candles is each candle is a longer duration in order to have this spaced out equally with log age. So the first candle is 0.37 years of time. So it's the price range for that, third of a year roughly. And the final candle is 3.7 years. And if you do it this way, 9 of the candles are green and only 2 are red. So if you then want to do a Kelly analysis, you get a high Kelly allocation. But it's kind of another way of showing this, and you won't find candle charts typically that look like this. But the 2 lines through here, one is just the ordinary least squared, that's the black line, and the purple one is a quantile regression, and they're quite similar. And they're both around 5.7, 5.8. Okay, so what's the reason behind all this? Why would Bitcoin manifest a power law when stocks don't and currencies don't and gold does not? And I maintain that one reason is that it is self-creating, self-defining, self-producing. There's a relatively new term called autopoiesis that was first applied in the 1970s in biology. Poiesis from the Greek means creation or production. Fiat and gold are not autopoietic. Bitcoin is. Fiat and gold are allopoietic, the opposite. And the reason is that from a monetary standpoint, gold does not reproduce its own monetary structure. It doesn't. Gold just sits there as a element 79. It does not create coins, and it does not create a system to circulate those, to put those out. It does not create a ledger of those holdings. Bitcoin does all that. Bitcoin mints its own money, puts it on a decentralized ledger, and provides all the tools for peer-to-peer exchange. So it has things in terms of Frick's protocol, hard scarcity. The vault is built in, right? For gold, you have to build the vault exogenously. and the security. And you have to do the minting and the mining and the assaying exogenously. And you have to define the weights and the measures and distribution system. So gold's monetary role is externally assigned by humans, by states and institutions. Bitcoin has no issuer, no foundation. The security scales with more hash rate and with the value. And the value and the hash rate are very highly correlated. Of course, it's globally neutral, and it has its monetary memory of its path. So this is a self-organizing, self-producing system. And the fact that it can develop that network, and then it has some strong feedback loops, the difficulty adjustment is one of the most important, then the system can kind of close in on itself. And that allows you to move away from kind of exponential runaway growth to more endogenously managed growth, which power laws exhibit. And Bitcoin is not one network, it's a meta network. And this infographic has about 13 constituent networks in it. The ones in green are endogenous to Bitcoin. The ones in red are TradFi. And, the global macro network, energy, semiconductors, traditional financial system. Now, you could say that the ASICs, that's kind of hybrid, right? Because Bitcoin defines what kind of ASICs it needs. And so the miners go out and ask for that kind of a product. But then you have all of these blue boxes that are hybrids, and that includes things like exchanges and futures and options and leverage and ETFs and treasury companies like Strategy and the, Bitcoin information network and second layers like Lightning and so forth. So those act as interface, and there are a lot of feedback loops, running around the system. So it's a complex, self-regulating system that starts from the protocol, that reaches consensus, that grows security, and that incentivizes more adoption. And then that allows it to be money and the value to go up. And of course, as the value rises, that incentivizes miners to devote more resources and increase the security. So it's a positive feedback loop or set of loops. Okay, so autopoietic, the meta network grows, and when it does, you develop structure. And so, you and I are nodes, or we may have a few addresses, and then you've got these fat nodes, which are the exchanges or large balances, whales, or treasury companies, or ETFs, and so forth. And once you develop that kind of structure, you get preferential attachment to the fat nodes. They have many more correspondence than you and I do as individuals. So those are other kinds of feedback loops. And you stabilize the growth. It's called a Lambert-W process that constrains an exponential into more power law growth. And we've demonstrated the power law using OLS regression and quantile regression and random pair scaling and number of other techniques. You can look at the velocity, and that's a power law one index lower. You can use Bayesian techniques. And in our published paper, we used OLS regression. We used the random pair scaling. We used Bayesian techniques. We used AIC and BIC to show that the residuals are stationary as you want them to behave, although the main trend is certainly non-stationary, and so forth. And we also demonstrated something called the affine connection, which is getting at the geometry of the network. And this table and these figures are from the paper. And basically, there are three power laws shown here. The one on the left, A, is the adoption power law, and its exponent beta sub A, 3.05. So that's a cubic law that I hinted at before, and that's what we observed for the number of addresses, non-zero balance addresses, a very high R squared, 0.98, and 5,700 daily data points. Then this one in the middle is the Metcalfe scaling. It's not quite squared. It's 1.84. Again, a very high R squared 0.95. So our premise, what we demonstrated, we believe, is that you have adoption times Metcalfe. Adoption gives you 3.05. Metcalfe gives you 1.84. You multiply those together, you expect to see 5.6 as the power law for price, as the power law exponent, growth defining exponent for price. And when we do that with price, we get 5.69. And we get R squared, very high, also 0.96. So it's within, 2%, right? The exponent is almost the same to within 2% of the value, less. The reason why the adoption is a power law we believe is because it's viral. You find this with the spread of actual biological viruses in human and other populations, that there is tendency for power law. And, we believe that Bitcoin spreads virally because of the nature of it. It's kind of difficult to understand. And you know how hard it is to orange pill people. People tend to, get orange pilled by other people that they know very well and that they put trust or faith in. And I think it's probably true for companies and larger institutions very well. If there's a partner that they work with, partner company, then they're more likely, to become orange pilled as well. And the Metcalfe law applies to with 8%. It's 8% lower than 2.0, but that's not uncommon because not everybody on the network talks to everybody else equally. You tend to get clustering in networks. And in fact, it's that clustering that helps the whole network stabilize.
Did you
Yes.
just a question, because did you see a different address sizes for the users, differences when you exclude bigger addresses, or just only focus on smaller ones?
Yes. So that's initial adoption. And a larger context would be, it's not just adoption, it's how much money you commit, right? How much fiat you commit. But it is the case that as you raise the floor and the balances, that they're all power laws, but they're less steep. So instead of seeing a cube law, and I don't remember the numbers, but if you look at like 1 Bitcoin or more, or 10 Bitcoin or more, you'll see things that are more like a square law, or sometimes even flatter than that. And actually, then when you plot those, that itself has kind of a power law relationship. But yes, we do see that.
So the adoption curve is steeper the lower the Bitcoin amount.
Correct. And this is adoption. So this is like when you're coming to Bitcoin, it's like the spread of when you catch the mind virus, right? On this slide, the middle panel is the paper that got published in one of the Elsevier journals based out of Europe. It's called Nonlinear Science. It's a well-regarded journal. We went through peer review for publication, and you see the full title, Mechanistic Derivation of Bitcoin Price Power Law, Network Adoption Dynamics, basically times generalized Metcalfe scaling. And you can find the preprint on the CERN preprint site. The name of that is Zenodo, Zenodo, so you can find it there. And you should be able to access nonlinear science at no charge. I'm not sure, but we had paid them a fee to allow people to download it freely. And then I recommend to everybody the Physics of Bitcoin book, which came out earlier this year, written by Giovanni, the director of the Scientific Bitcoin Institute. Rather lengthy book of order 500 pages. I was pleased to write the foreword for that. It's available as an ebook for around $10. The soft cover is a large book, large format, and has a lot of color charts and so forth. So it's a little bit on the expensive side. It's almost like a textbook, basically.
And it's huge. I saw it in real life. It's a big book.
It's a big, thick book, but if you want to know about the physics of Bitcoin and the power law, it's the way to go. And you can go to the scientificbitcoininstitute.org and /research, and you can find the links to these. And this is our recent regression. This comes off of the Physics of Bitcoin site, which is the website associated with the book. And this shows the power law exponent is 5.68, and the orange line is the main regression, and then you see some other lines dashed and colored and so forth, and those are 1 and 2 sigma and 1.5 sigma away, above and below. And of course, this is a log. Let me see, is this a log chart or not in the bottom? Yeah, it's a log chart. It's labeled with linear years, but it's a log chart. So this is why it's a straight line. And but if you want to look at it in log linear or even linear, the site allows you to do that. So you can toggle between those. You can even look at the residuals, subtracting out the power law, and see what the bubbles and troughs look like once you remove the power law. The volatility here is about 0.3 in log 10 price terms. That's a factor 2, and that's 1 sigma. So 2 sigma would be a factor 4, up or down. Fortunately, this is a convex asset. It tends to spend more time. It tends to have a larger excursion on the upside, but it tends to spend more time somewhat below the power law in order to balance off that. And it rarely drops down much more than 1 sigma. And that we're down 1 sigma from the trend. We should be on trend. We should be around 135, maybe 140,000, and we're at 62, 63. So we're down by a little over factor 2, and that's a little over 1 standard deviation. So you've really got to think about volatility here in log price space. The other interesting kind of coincidence is, given that power law exponent 5.68, if you take the current age, increase it by 1.5, add 50%, you expect a 10 times increase on power law trend. So that's another 8.7 years or 8.8 years from now, you'd expect to see about 10 times. So that's above 1 million on trend using, the current power law trend value. And to falsify the power law, we'd have to really get down to 3 sigma and spend a good amount of time there, maybe a year. And that's way down around 17,000. All right. This is a different take on things, and it uses realized cap. So what I did was I took the realized cap each day, and I took the minted Bitcoin balance as a function of each day. And so I'm able to get realized cap per Bitcoin minted as a function of age. And this is a log chart. And when you run a power law regression there, you get 5.81 for the index. It's slightly steeper, not surprisingly, because the number of coins is increasing. Again, the R-squared is very good. And then the standard deviation is similar, but it's also shows a decline, as it does with the straight price power law. It is falling with time, and it's falling almost as a reciprocal. You can either model it as a power law with close to a reciprocal, something like t to the minus 0.8 power law, or you can have it as a reciprocal plus some offset. Either one of those will fit fairly well. So that's another way that validates it. Now, what about inflation? So here the blue line is the usual nominal Bitcoin price. The second is adjusted for the US dollar into money supply. And if you do that, if you normalize it to old dollars, effectively to the buying power of old dollars, then it's a less steep slope. So it's 5.16 instead of 5.63, but still a very steep slope. And also, I need to point out that when you do that, you're only adjusting for fiat inflation, but you're not adjusting for the increase in the supply of Bitcoin. So you're not adjusting for Bitcoin inflation that we've already experienced. And in fact, the Bitcoin inflation was higher than the M2 inflation for the period up to about age 8, illustrated by the red arrows down there. And those two effects almost offset each other. So if you look at both of those, you end up with about a 2% difference in the slope. The difference between about 5.63 and about 5.75. If you adjust for both the inflation number of Bitcoin and the M2 inflation. So inflation is, it's a first order red herring. It's really not the reason why we're seeing a power law. Okay, let's look at the decline and fall of fiats. This is the 6 most important fiat currencies: the dollar, the euro, the pound, the yen, the yuan, and the SDR from the IMF, which is just actually a basket of the other 5 with various weights, highly weighted for the dollar and secondarily the euro and so forth. They're all power laws, very similar exponents. The exponents range between 5.54 and just under 6. But the difference here is these are declining power laws. So I've plotted the currency per Bitcoin instead of the Bitcoin denominated in dollars. This is the dollars per Bitcoin. And of course, it's fallen very steeply over time. And R squareds are all about 0.96, very, very strong. And you can see the lines nearly parallel each other. The weakest of these turns out to be the Japanese yen, because it's got a minus 5.96. It's got the lowest number. And the strongest actually turned out to be, I guess, the British pound, minus 5.54. But there's not a huge spread between those. Fiats, tend to trade, the major fiats tend to trade fairly close to each other. And the residuals are all around 0.3 dex, which means 10 to the 0.3, which means a factor of 2 in linear terms. And you can see the multiplicative factors. They're not that different in terms of the volatility, because the volatility is mostly in Bitcoin. This is Bitcoin versus 4 major commodities. Gold is the blue line, silver is the orange line. And the other two, the green is WTI, that's oil. And the red line is corn. They're all in the range of about 5.4 to 5.8, falling, all with R squared about 0.96, and with a similar volatility of about 0.3 in the log, or about a factor 2 to 2.2 in linear terms. The strongest one is gold, not surprisingly, and the weakest over this interval is oil. And then if we just pull gold out, and now I've run it in the other direction, this is the number of gold ounces per Bitcoin. And you see that it's increased by 1, 2, 3, about 4.5 orders of magnitude, almost really from the first data point, almost 5 orders of magnitude. The power law fit is 5.39 index, R squared quite high at 0.95. And then one can ask, when will the market cap of Bitcoin reach the market cap of gold? And I took the total gold supply in the world, which is about 6.5 billion ounces. And then I added some inflation in that, about 2% per year increase in the gold supply. And Bitcoin has to reach 360 ounces, and today it's only at about 16 ounces. So it's got to increase by about 20 times or so. Now we're well below trend. We've had quite a bit of dive since October in Bitcoin versus gold. Gold had a nice run up, but Bitcoin started recovering a little bit the last couple of months relative to gold. We've got to get back up to be back on trend to 50 ounces or so. But in order to reach all of the gold market cap, we have to get to 360 ounces. So if you just project this out, if it maintains the same power law slope, that would be around 2034.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control. And I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. That's not too long.
It's not too long.
That's like 8 years.
Yeah, it's also around the $1 million price point, right?
Oh yeah, like because gold will go up in value also. So like,
yes.
I remembered, I think the first time I looked at that, which is, it's kind of funny. First time I looked at gold versus Bitcoin and trying to figure out when Bitcoin will cross gold. I think it was like 600,000. If it would just jump up to the market cap of what Bitcoin, what gold is currently at, it's already, I think now it's more realistic to hit at around $1 million. Of course, there's so many variables in there, like you cannot say it exactly, but I think it would be a cool event to have Bitcoin crossing $1 million in a similar time range when Bitcoin is also crossing or flippening gold.
That's right. And actually, there are two stages. The first stage would be to reach central bank gold, which is central bank and national treasury gold, which is about 20%. So we'd have to get to about 2 kilograms or so. You know, this is like 10 kilograms. You know, there's such a thing as a 400-ounce good delivery bar. That's one image to keep in your head. One of those 400-ounce good delivery bars, one Bitcoin. If you hold one Bitcoin today, someday on this projection, it could be worth the same as a 400-ounce good delivery bar that you know, you see when you see the pictures in those big vaults, right? At the Fed and elsewhere.
They are heavy.
They're heavy. Well, they're 400 troy ounces. Yeah. Okay. This is how the power law has developed over time. The blue is Bitcoin versus the dollar. The orange is Bitcoin versus gold. And it starts at age 5, I think, or almost age 5, a little less. And this is a linear chart. I think this is my only linear chart, except for the histogram I'm going to show you. But that's because this is the exponent as a function of age. And very early on, it jumped up and fell down. It got to like 8 or something and fell down and then recovered. But it basically locked in once you got to about age 6 or 7. So since age 7, the index has been around in the range of 5.5 to 6 roughly. And the whole curve flattened out. Gold ended up being a little stronger the last few years. But there's also this shaded area, and that shows the uncertainty in the power law index. It's just kind of locked in and got more and more stable as time went on. And so the R squared has been above 0.9 since 2016, and now it's 0.95. And this is the 10 power laws on one chart, the indices. They all have R squared better than 0.95, so they're all excellent fits. There's a very well-known liquidity expert. I'm sure you probably talked with him. And I was watching one of his shows in the past week or so, and he was talking about the correlation between his proprietary liquidity index and Bitcoin. And he said, well, it has a correlation of about 0.55. And he was rather proud of it. And then he went on to say, that's an R squared of 0.3, and that's pretty high for financial indices, 0.3. We're seeing 0.95 against all of these. And you can see how close the exponents are to each other. The blue ones are the fiats, the gold ones are the 4 commodities, and they're all within 6% of 5.69. So the exponent varies a little bit by numeraire, which is just the terminology that's used for the denominator. But they all exhibit a high positive range that basically sits between 5.4 and 6. The scaling laws apply across all of this.
It's crazy to think about that. It's like all so evenly distributed. Also with the previous charts of like with the time, it's basically had like little volatility across the time and got even better as it progressed.
Right. Yeah. Everything is fiat. Almost everything is fiat relative to Bitcoin.
That's a good way to look at it.
Maybe not NVIDIA, but just about everything is fiat. And Bitcoin conquers space and time. Gold conquered time by Bitcoin conquers both, holds value better than gold does, and you can move it faster than you can move fiat. Settlement times for fiat with the banking network can be several days and sometimes longer. And these two charts show, the power law dynamics. With the upper chart shows Bitcoin plays against all 6 of those fiat currencies all across the globe. And also power laws are more stable. So, Chat has this to say that power law growth reflects declining proportional growth and scale invariant organization for the network, right? For the meta network. Whereas positive exponential growth preserves a constant proportional rate, but eventually is going to require saturation or correction. And you see this in the lifetime of companies relative to the lifetime of cities. Cities of substantial size tend to last for hundreds, even thousands of years. Companies, the average lifetime of publicly traded companies in a study that was done with 6,000 companies by Jeffrey West, the average lifetime before they either went out of business or were acquired or, broke up or something was 10 and a half years. It's rare to see companies last for 20 years these days. We're used to the the ones that are the high visibility, they've lasted longer. But that's successor bias. Even the S&P 500 is constantly being rejuggled with successor bias.
It's so interesting because the companies are, because people always talk about the big companies and big tech and all of those, and they're so huge. We have to contain them and we have to limit them and all of those things. But if you actually look a little bit along a time horizon, you see that those big companies rise up and then fall down again. I mean, look at the 10 biggest companies right now, according to market cap, and then look at the 10 biggest companies according to market cap like 20, 30 years ago. None of them were in there. They all changed. I mean, some of those companies haven't been even around publicly traded like 30 years ago. Most of them probably. So it's like it's always interesting to see the duration of those companies. I mean, strategy might be a counter example to that, as there already is a longer time there. But yeah,
very precisely. I think what happens is if you adopt a Bitcoin treasury, you're attempting to turn yourself from being a company to being more like a city, and cities do behave like power laws, and they have efficiency of scaling where their input costs are lower than their GDP output costs. I had a long career in supercomputing. Every single company I worked for went out of business or got acquired, and some of them were big names like Cray, Sun Microsystems. The last one that acquired that, Sun Microsystems, is still in business. That's Oracle. But they only got started around the time I started my career, So that's survivorship bias.
Okay, so that's interesting. So because a company adopts Bitcoin, they adopt something that lives on forever and swap it. So like they swap something that dies off slowly for something that lives longer and can basically be there for hundreds of thousands of years. So they swap the US dollars for the Bitcoin. And because of that, they can live off those Bitcoin also a long time. I mean, it kind of makes sense because if you have more Bitcoin, I mean, it's the whole retirement on Bitcoin topic that is very popular just for companies of if you acquire for 10 years, if you're 10 years a publicly traded company, highly profitable, and you put your money into Bitcoin and that accumulates and you just like keep on accumulating, and at some point you have so much Bitcoin that you can keep the company running without having any complexes or like downdraws, because the Bitcoin, you can use the Bitcoin to pay for the ongoing costs. Is that kind of what you're hinting?
Yes. You have to reach a critical mass, and we've seen some issues with many of the treasury companies, right? And but I think strategy has certainly achieved a critical mass. I mean,
yeah, with like 800,000 plus Bitcoin.
Right? So I think they're going through some heartburn now, but if Bitcoin persists on the power law, and given that it's gone up so many orders of magnitude, like 7, it seems more than likely that it can go up one more order of magnitude. It's not anywhere near saturation relative to the wealth in the world, which is household wealth is about 600 trillion. So, yeah.
I mean, people keep saying that like it's a rough year for strategy, but they added like I think 170,000 Bitcoin in this year, even accounting for the like 3,000 that they sold. It's like they focus on the 3,000 that they sold and they focus on the stock price, but they added 170,000 Bitcoin this year and retired that.
Yeah. So because they have all those reserves, they could use a little bit of it to help stabilize when they hit a rough patch. And they did get over their skis a little bit, I think, is my personal opinion. And, the market chastised them, and so they're adjusting to that. Okay, I'll close with this. The Scientific Bitcoin Institute, which is .org if you want to go to the website, was founded at the beginning of the year. Our director is Giovanni Santostasi, who discovered this power law relationship. We're established as a California not-for-profit, as an educational and research foundation. We forming university partnerships. We have one with Polytech in Torino, in Italy, and then we have another one with a well-known university in Taiwan, and there's one we're looking at in Switzerland. We've got offices in San Diego, Torino, and Bangkok, and you can sign up and get basic indicators free, and also a free newsletter, which should be on a bi-weekly schedule that we're just getting started with. And we're going to have membership tiers. So there'll be some basic level of indicators that are free, but then if you join as a member and pay some monthly amount, we're still defining those, but it'll be modest. Then you'll have access to higher levels of indicators depending on your tier. And we're also looking for corporate sponsors. We have a primary sponsor, which is a Bitcoin-only hedge fund in Europe. And we do have our Physics of Bitcoin show. We have it most Wednesdays at 1500 Central European time. So please join us on that. That's live on YouTube at my channel or the Scientific Bitcoin Institute or Giovanni's channel.
Fascinating. I love that. Really cool, the work that you've been doing. I love that you guys also not only put some models out, but actually trying to help people with the channel, with education, with memberships and communities. It's a good step of because there's putting out a thesis is one thing, putting out a model, putting out something out there, but then actually building something on top is I think way more valuable for people. There's a couple of things. I think we talked last time about the bubbles that we talked last time, and if I remember correctly, I didn't look it up, but I remember correctly, you said you expect the next bubble to be, was it May 2027? Something like that?
Well, I've done some more work since then and extends it out a little bit because there's a phase component. This is the log periodicity. It's a complement to the power law. And the power law is continuous scale invariance, and log periodicity is discrete scale invariance. And the idea is that if you have this kind of resonant structure, think of a bell, or think of a cylinder, that may have if you've got a big organ pipe, right? It's got a fundamental tone. And you've got all these exogenous influences that are striking this resonant structure. And Bitcoin seems to have this resonant log periodicity, has a particular angular frequency, turns out to be 8.8, that corresponds into a spacing for troughs and bubbles of a little over a factor of 2 if it's in log time. So it's not a linear spacing, it's a log spacing for the structure. And if you just took that straight from the origin, you didn't think about phase, you would have been in 2027. Giovanni had looked at this just in passing in 2019, and then he had not looked at it again. And I started looking at it last year, and I've done a lot of work on it. And you can have that fundamental, but as people who are involved in music know, you have harmonics as well. And you get some predictivity by adding maybe one harmonic, maybe two. But the fundamental with the phase correction and with the fact that you've got amplitude decay and those interplay, and once you put all that into the mix, it looks like it's peaking out in 2029. So we're in kind of this extended improving phase with respect to the fundamental log periodicity. And then it's got this harmonic, which has been working against us during this past year, but it looks like it's turning as well. The combination of those two, if we look out to spring of 2028, is going to give us a lift over and above the power law. So you have the power law uptrend, and you have some boost from those. And it says close to 300,000, but you still have that big uncertainty of a factor 2 to contend with.
So 300,000 was 2009.
No, that's late. That's a little less than 2 years from now. That's Q2 2028.
Interesting. It's funny because like then 2034 are like a million. It's like 300,000 sounds not that far away. I mean, of course, now we had like what 60K something. So it is far away, but it's like we already reached 120K. 120 feels like 150. 300 is just twice of 130, and a million seems like out of this world, you know. It seems like so far. It's like reaching for stars.
Yes, it does. We do have to wait longer and longer. That's the nature of it. The instantaneous compound rate of growth to first order is equal to the power law exponent over the age. So if you take 5.68, you divide it by age 17.5, that's 38%. That's our trend for the power law. That's ignoring the log periodicity effect, which right now is helpful. But the volatility is also coming down. And so, it's kind of offsetting. Yes, the return's coming down, but the volatility is coming down too. And the net effect of that is you can maintain a good allocation.
Yeah, if you have a lower volatility, it also attracts bigger capital pools that were turned off by the volatility. And so like it's a nice synergy because if Bitcoin has a volatility of, I don't know, 90%, not so many people are willing to put a lot of money into something that can just crash within months to like 90% down. Now, right now, it seems like we have maybe a volatility of 50, 60% maybe in the most radical downward move that we're currently living in. Let's see where we're ending up at, but that's already way better, but still very volatile, which still scares a lot of people. If the volatility is like 20, 30% at max, a lot of people are, I'll take that. Like, that's fine with me.
Yeah, 20%, then you're getting more like tech stock volatility, right? So.
And one thing I was thinking about, I don't know, it's just something funny because I thought about at the Seyr interview I did 2 years ago, and he was kind of arguing a long time in the podcast how Bitcoin brought science to money. Before Bitcoin, money was not as scientific as it is now with Bitcoin. And now it seems like you guys are adding more science into Bitcoin.
Absolutely. That's our goal. Yeah. That's our goal, is to really approach it through a scientific lens. And that's not just the power law, but other aspects as well. In fact, Giovanni just posted, a seed generation tool. So go look at the Scientific Bitcoin Institute X account, or Giovanni's X account.
Oh, so that's fun. Yeah, like people need that. Don't trust the cold card thing. I'm really curious how the cold card thing will shake out in like a few weeks, because I have a weird feeling that we haven't seen it all. But let's see. We have an end routine, as you know from previous appearances, where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question: what is the most annoying aspect of the hardcore Bitcoin community?
Oh, well, it seems like the level of internal contention is certainly up because of VIP 110 in particular. Yeah. So the internal contention, um, I on that issue, I incline more towards Adam Back's view, and I don't see the problem really. I don't think it's broken, and the most important thing is consensus. And so that's my view. But if it goes the other way, Bitcoin will survive and prosper. So I think this tendency that we have, but it goes with the territory. You have more camps. Bitcoin is potentially for everybody. It's for everybody who can handle it. And most people can't handle the volatility yet, right? So that will improve over time.
Yeah, as I'm trying to be in the business of orange pilling people, it's not easy. There's a lot of objections that people have with Bitcoin, and they are fair objections. And like the volatility is a big one, but they will get smaller over time, and eventually people have either Bitcoin or some kind of indirect exposure to Bitcoin. Really cool. Thank you so much for being on the podcast and being again such a generous guest with your time and with your insights. Before I let you go, I think, oh no, you said about Giovanni, but like, where can people find you and ask you questions?
Yeah, Money or Debt on X, and then I've got a Substack page. It's just my first name, last name. It's Substack, where I post articles once or twice a week, mostly free, but there's some that are paywall.
Awesome. Then thank you so much for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.